When it comes to large-scale financial institutions, popular names such as Goldman Sachs, J.P. Morgan Chase, and Berkshire Hathaway would spring to mind. Well, you are not wrong in that, as J.P. Morgan has been a dominant player in the banking industry from the 18th century. No surprise that today, J.P. Morgan & Chase is the largest bank in the world in terms of market capitalization and control assets worth over $3.7 trillion. But have you ever heard of BlackRock? BlackRock is a global leader in financial management but is relatively lesser known than its peers. BlackRock is the unseen influencer of all policies and directives. Sovereign wealth funds in autocratic regimes are an excellent example of this principle. What BlackRock does, is it influences even the largest influencers in the game. In 2021, BlackRock became the first public asset manager to hit $10 trillion in assets. Yes, you heard it right, trillion with a T. Just for your information. The grand total of the sovereign wealth funds managed by over 91 such funds across the world is projected to be worth approximately $9 trillion. BlackRock is a single investment management giant standing with all the sovereign wealth funds in the world. The basic motto of BlackRock is to help established and large-scale funds manage their respective portfolios of assets while managing the risk of those portfolios. BlackRock was founded in 1988 by Larry Fink, Robert S. Capito, Susan Wagner, Barbara Novick, Ben Golub, Hugh Frater, Ralph Schlosstein, and Keith Anderson to provide institutional clients with asset management services, while managing the risk of the portfolios. The founders of BlackRock were not amateurs. The firm's founders had come together with prior experience in the mortgage-backed securities market at the investment bank, the First Boston Corporation. Their expertise in managing risk was the key in turning BlackRock into a financial leader. Larry Fink is widely regarded as one of today's most prominent financial figures. His origins are far more modest. Fink graduated from the University of California with a BA in political science and an MBA in real estate. With a pay scale of $20,000, he joined First Boston. His hard work was immediately recognized by managers, and he was groomed to become the youngest CEO at 27. He was appointed as the head of generating and creating mortgage-backed securities 3 years after joining First Boston. Fink made a profit of $1 billion for the company, but in 1986, Fink's profitable track record took a hit due to some miscalculation made by the finance team. The department, which was led by Fink, predicted that interest rates would soar, but the reverse happened. This wiped out $100 million from the clients' portfolios, making Fink a troll in less than a day. This was a huge setback for Fink and a major question on his accountability. But that's what made him want to redeem himself and show what he was capable of. That's when the idea to provide asset management services centered around risk management struck Fink's mind. Larry co-founded BlackRock with Stephen A. Schwartzman under the umbrella of the Blackstone Group. With a $5 million loan, the firm initially focused primarily on fixed income. By listening to clients and understanding their unmet needs, the firm was able to develop important early innovations related to closed-end funds, trusts, defined contribution plans and more. Larry Fink and Steve Schwartzman parted ways because Schwartzman had issues regarding Fink's idea of allocating more equities to the employees. Fast forward to 1992, the firm adopted the name BlackRock. By the end of that year, BlackRock had $17 billion in assets under management. At the end of 1994, the figure was $53 billion. In 1999, BlackRock decided to go public. However, BlackRock had that month's worst IPO. But as the time passed, the market realized that, despite having the cheap shares, BlackRock was keeping its commitments to investors. In the same year, BlackRock launched a product, Aladdin, and that transitioned BlackRock as the global leader in the financial world. In 1999, BlackRock launched Aladdin, a risk evaluation and risk management system including 5,000 computers that work 24/7 and are monitored by a group of engineers, mathematicians, and developers. As we discussed, BlackRock's key specialty is to help established and large-scale funds manage their respective portfolios of assets while keeping risk management a basic priority. With Aladdin, BlackRock began to share their unmatched risk management technology with other financial institutions. The Blackrock software could track millions of daily deals and analyze each asset in its clients' portfolios to understand how they might be influenced by even minor economic activities. Aladdin utilizes collective intelligence, a tool to help you organize and communicate effectively and efficiently to meet demand. This allows you to see a step-by-step process of the product and helps you make informed decisions. The technology was actively scouring the markets for anything that may go bad, and it had formed the basis for a second firm that would extend Blackrock's scope beyond asset management into the realm of client advice. Aladdin is so big that it acts as the central nervous system for many of the largest investment management firms. Thanks to Aladdin, BlackRock actually oversees $21 trillion worth of assets, not just $10 trillion of assets. In the year 2008, the world entered a global financial recession, and it was one of the biggest recessions the world has ever seen. Bear Stearns and American International Group collapsed. The New York Federal Reserve needed a savior who could get them out of the mess, and they found their savior. You guessed it right. The Federal Reserve asked Larry Fink to help oversee billions of dollars in ailing assets that had belonged to them. Fink's BlackRock helped price and sell those assets for the government at the same time it was helping private clients buy similar assets. Fink, the once humiliated guy, had arrived to save the country from an economic disaster. All of this was done behind closed doors, and the terms of the agreement were not disclosed. And just like that, Larry became the most powerful man in the financial industry. While many big banking institutions almost collapsed during the Great Recession because of their bad risk management, BlackRock only got bigger. After 2008, most of the funds and banks turned to BlackRock, and most specifically to Aladdin for better risk management. One of the most important strategies of the BlackRock growth model was acquisitions. It is like a game, where your character grows bigger by eating other smaller players. By 2005, BlackRock had strong fixed income, equity and advisory businesses. The firm then acquired a series of transformational mergers. These acquisitions strengthened BlackRock's products and services, mixed with more offerings in equity, multi-asset products and alternatives. BlackRock's biggest acquisition took place in 2009, when it acquired Barclays Global Investors, giving the firm additional active, index and exchange-traded fund capabilities through iShares. With each acquisition and successful merger, the asset under management numbers under it kept increasing by the billions to the current trillions. In March 2020, when the world was hit with the coronavirus pandemic, the feds again turned to BlackRock. The Federal Reserve said it tapped BlackRock, the world's largest asset manager, to help oversee the bank's efforts to stabilize the bond market amid the economic turmoil caused by the coronavirus pandemic. A BlackRock subsidiary will advise the Fed on the purchase of billions of dollars in commercial mortgage-backed securities and investment-grade corporate bonds, just like they did in the 2008 recession. Once again, Larry Fink showed the world how important he is in the world of finance and banking. This makes BlackRock the biggest shadow bank that actually owns the world. It is shadowy but not at all shady. In fact, they're one of the most responsible institutions out there. It is not possible to avoid any controversy or backlash when you're such a big name, and BlackRock is no different. In 2019, BlackRock faced backlash from environment activists, and several protests were held against their investment in coal and oil-producing companies. So, the world's biggest investor is putting environmental and social priorities at the forefront of its investment approach. In an annual letter to CEOs, BlackRock Chairman and CEO Larry Fink said, "Climate change has become a defining factor in companies' long-term prospects. But awareness is rapidly changing, and I believe we are on the edge of a fundamental reshaping of finance." Among the many changes implemented in 2021, BlackRock said it expects companies to disclose a plan for transitioning to a lower carbon economy, report key stakeholders and business interests, and improve racial and gender diversity on large corporate boards. Where we believe companies are not moving with sufficient speed and urgency, our most frequent course of action will be to hold directors accountable by voting against their re-election, BlackRock said in the report. Indeed, with assets under management close to $10 trillion, BlackRock has significant influence in proxy battles. According to Larry Fink, he just wants to be perceived as a good human being. Are these big names really good human beings? Do they really care about the Earth? How much control do they have on the world? How long will they last? What do you guys think? Tell us in the comments.